Good morning, good afternoon, and good evening, depending where you are on the planet. And welcome to the August Trade Day webinar with Steve Miley on the call on TGI. Thank God it's Friday, the 11th of February. So welcome everyone. We're going to go for our usual, normal, regular run through in here today. Calendar, what we've had, what we've got coming up. We will take a look at some articles from the major macro news feeds, see what's going on in the markets right now. Nothing massively too new to add on the actual macro fundamentals, apart from doing the recap on yesterday's data, which was critical. And then we're going to take a look at the charts and see what's going on the chart. So first of all, in here, let's do a recap onto yesterday. Now, James was on the webinar yesterday, and I know he flagged the CPI data and flagged the fact that it was going to be a big piece of data and flagged the fact that it was going to be intensified and increased volatility likely around a much watched piece of data now. Remember, inflation is critical. All the hawkishness we've seen from not just the Fed, from global central banks, the ECB and the Bank of England over the past week in here, and the Fed throughout January and into February. All of that is being driven by inflation concerns, and the core CPI number, CPI, the Consumer Price Index, is a critical piece of data in that inflation jigsaw, particularly for the world's largest economy, the US. So all eyes were going to be on it yesterday, and they certainly were, and the markets did react, and it was very volatile. The markets initially, so when I say markets now, I'm talking stock indices, equity markets, initially saw the very high number, the bigger than expected. So here's all the CPI data, just doing the recap to yesterday in here. So you can see in here a sea of green through all that CPI. It's all green in there. So beating expectation. In green usually means good, but obviously in an inflationary environment with further inflationary pressures, these numbers are higher than expected. So core CPI above the 5.96%, above what's expected. The month-on-month data, 0.5, 0.6 expected. The normal CPI, the headline number, not the core CPI number, 7.3 expected, 7.5. Month-on-month, 0.5 expected, 0.6. All of them beating it above expectations in here. Increasing, intensifying inflationary pressures. So the markets, as kind of all you would expect initially after the data was released, and while the futures were open, the futures markets sold off into the cash market open. So we were lower on the data. No surprises there. Then through the cash market open, and the cash market actually held in pretty well and rebounded fairly significantly. So we saw a significant sell-off and then a significant rebound. But then the market turned around again as we got into the cash market session, as we got into the session, and bond prices went significantly lower bond prices equaling higher bond yields. Okay, the US 10-year note broke the 2% level that we've been watching for, psychological barrier through 2% at multi-year high yields. And all of that, the fact that the bond market then started to reaccelerate, lower in price, higher in yields, and then drove equity markets back lower again. And we're going to go through this when we go to the charts. We'll look at it again on the charts. But all being driven by the CPI data. A super choppy session. And what I wanted to say is, James, was on the call yesterday. James and myself, seasoned veteran traders. These are there are opportunities, and it's exciting, and the markets are moving. It's so easy as a trader to get pulled into the volatility, get pulled into the hype. But this is not necessarily where you're going to make your kind of bread and butter daily profits. Okay. You can get big wins, but big wins also big losses. And the market turned around. It felt like, it was going lower. It ended up rebounding aggressively and then ended up all the way back lower again on the stock side, and similar on the bond side. And if you're trading the dollars, if you're trading the FX market, dollar index was choppy. Initially the dollar strengthened, then weakened, then re-strengthened again. So the markets were all over the place yesterday, and it was difficult to trade. It was difficult to trade. No consistency in the direction, turned on a dime, and it looked like at times as it dipped and it rebounded. Okay, that looked like it was over, and then we were rebounding. And we're going to go back up to new highs, and then gave it all back up again. Was it going to be another dip? No, just dipped and carried on and ended up on the lows and lower again overnight. So tricky conditions. Best thing to do is be either not involved, or if you are involved, because of the extra volatility, you're going to make more potentially on the actual movements. Reduce your trading size, trade smaller positions, and you have to be a little bit more agile with your stops, and don't become tied when the market's volatile like that. It's don't become too tied to a directional bias. Don't get too tied. I'm at the moment very naturally a bull on stock indices. However, if the market's telling you something different, you have to kind of change that around. Okay, so it feels like I'm giving you a lecture now, guys, so I don't want it to sound like a lecture, but just take on board when we had these big opportunities. With big opportunities comes also bigger risk as well, and don't want you guys losing money on these occurrences, particularly if you're making kind of steady progress on just normal trading days. Anyway, let's get back to today's calendar in here and wind forward to what we've got coming up today. Well, it's going to be light going into the end of the week. In fact, most of the data we're going to be focused on has already gone. So we had strong, better than expected GDP data out of the UK this morning. So a positive there. Also, the industrial manufacturing production data beat expectations as well. So positives there. CPI out of Germany, all bang in line. Look at all in black there, not in red or green. All bang in line with expectations. So probably a sigh of relief there that's not getting out of hand. Going into this afternoon, it does say Fed monetary policy report. That's not going to be too big an impact from that, we don't think. And the more of the focus probably at 10 a.m. Central Eastern Time, 9 a.m. Central Time, we have the Michigan consumer sentiment data. So watching out for that. Fed monetary policy, probably not too big a deal to be watching out for. Let's go and but we also have something else I just want to focus on as well. And it's picked up on both. I got both the European, just in case they didn't have it on the US version, but the European and US 5 things to start your day in here. And one thing I wanted to pick out in here, which I don't think on the US version, is Lagarde, Christine Lagarde in here, the ECB president, backing off. We saw it earlier this week, backing off from the kind of the very the interpreted hawkishness that came from the ECB meeting last Thursday. And central bankers, the European central bankers and speakers have tried to back away from the kind of and pull markets back, because the markets have moved very aggressively to lower prices, higher yields. And we looked at that yesterday when we looked at the bond chart, the Bund chart. And if we look at the Bund chart again here today, if I can look at Bund future, and we put it up yesterday from Trading View. So let me get it again from Trading View. Here it is on Trading View. And we'll launch the full chart. And you can see, though, that even though she's trying to pull the market back, so basically in the comments, it was like, we're not the Fed. But she may as well have said, we're not the Fed, right? The Governing Council would harm the economy's rebound from the pandemic if it were to rush to time. So it doesn't want to harm the economy if it was to rush to tighten monetary policy. Lara articles stress that the Eurozone can't be compared to other jurisdictions. The US economy is overheated, whereas our economy is far from being that. That's why we can and must proceed more cautiously. She's trying to rein in, okay? However, the markets didn't see it that way, and continue not to see it that way. Here's the bond chart, the Bund chart, which is the European government bonds. So yesterday, even though she was speaking there yesterday, look at the bond chart in here, significantly, again, lower in price. And it's plunged. There was last Thursday after the ECB. It carried on all Friday, all the beginning of this week. We got a slight respite rebound on Wednesday, but then lower, even though she said that yesterday, lower again. So yes, we have had a rebound this morning, but only rebounding, basically to the lows where we were, earlier this week. So certainly still very, very negative in here from European government bonds, despite Lagarde trying to backtrack. The other thing in here we had yesterday was Bullard was spoken yesterday and said he supports raising interest rates by a full percentage point by the start of July, okay, including the first half-point hike since 2000, okay? So Bullard in here, particularly hawkish, looking for, a whole percent up by July, by the middle of the year, and looking for potentially a 50 basis point rise on the first rise, okay? Now, it doesn't necessarily mean that's going to happen, okay? And it says here, look, however, centrist so he is a hawk, okay? So Bullard is more of a hawk anyway, so it's not surprising that the hawk is more hawkish. But the centrists among the top Philippines will be skeptical of a half-point hike and suggesting there's little need to start a hiking cycle with a more aggressive news. However, Goldman Sachs, and I'll go across to the US version, but this was on the European 5 things this morning. Excuse me. They now expect 7 rate hikes. There's 7 Fed meetings this year. They're looking for a rate hike at every meeting now. So they'd already moved in January from 4 to 5 hikes, and now into early February, now moving to 7 hikes. There's 7 meetings and looking for 25 basis points at the 7 consecutive FOMC meetings throughout this year. Okay, so a far more hawkish shift in here from the strategists at Goldman Sachs. And so all of that, continuing to put downside pressures. And we go and look at, it's logged me out in here. Let me re-log in here to Tradeovate. So go take a look at the charts. And let's take a look at the bond chart. Just pop this out and we'll go to the bonds. And so European markets pushing it. But look, Europe bonds yesterday plunging lower on the back of that data. Remember that data? And again, going back to 5 things in here, the 7.5% annual increase, the CPI data, largest since 1982. Even though we're starting to price in this inflationary pressures, even though we're pricing in the more hawkish tone from the central banks, in here, look, bonds in here accelerated lower. And remember, on the 10-year, this is the US 10-year note on the future that you can trade with Trade Day and on Tradeovate, on the CME future in here, the market accelerated lower. That broke down, it's breaking down in price here, but the yield pushed above 2% in here. So a significant threshold. Yes, we've had a little bit of a respite today, but an acceleration lower. And it was this acceleration lower. And if we step in and look at it intraday, so we had the initial data. Okay, you can see there's the data coming out on that bar there. Let me take it to a 30-minute chart. We've got an hour here, I think. Yeah. Let me go to the 30-minute chart and we'll see the data break. So there's the data breaking. So the market moves to here, okay? And then the cash market opens in here. So the market has exploded lower, okay? So that's fine. And the market dealt with that and the stock sold off. And then the bond market in here was static for a while and into the cash market in the US cash market open. When I say cash market, I'm talking about the cash equity market. So in here, the market then went sideways. So you can see in here, so this was when the data came out. This is 1:30 my time, okay? So 9:30, that's right, yeah, 9, 10, 11, 12, yeah. So 8:30, right? Yeah, 8:30 on Eastern time. The data comes out, and then going into the 9:30 open of the equity market into the cash market open in here, an hour later, the market then goes sideways. And during this, then after the equity market opens, then the equity market pops back higher. We'll go and take a look at we can go and take a look now, right? So in here, this is the 30-minute chart as well. So where are we yesterday? 30-minute chart. Where are we? Just trying to get to the right date. 10th at 1:30. It's here, right? It's all the way up here, yeah. So here it is here, right? Okay, so there's the initial move lower on the data, 132. And then here, the green bar is the cash market open. Because the bond market had stabilized it, we got priced in, it sold off, the bond market stabilized, and then stocks, when the cash market then opens, so initially sold off, the stocks come all the way back. And at this point in here, the markets look really healthy. It's holding in. However, what happened then is the bond markets decided they don't like it and they go lower again. Okay, so lower in price to higher yields, running right the way through into the cash market closes. Okay, and then what happens then for stocks? Obviously, stocks then see bond markets going back to lower prices, higher yields. The equity markets don't like it, and then they begin to sell off as well. And then they not only sold off into the close, and then through the close, and then overnight as well. So we've seen an extension lower overnight, but now a rebound. The market's now trying to rebound. Look, quite an impulsive bar actually. So this was from the last 30-minute bar. And this is now since my time 12:30. So this was between midday London, so 7 a.m. to 7:30 on Eastern time in here. The markets had this decent rebound in here. So a base forming, right? And, I'm kind of clinging to a more positive tone. And that's going to be helped, obviously, if we go back then to the bond market by this bounce on bonds. There's the daily chart. There's the bounce on the daily chart. There's the bounce. And in here, if you look at the bonds, this is the treasuries, okay? Treasury 10-year note, double bottom. Okay, little mini double bottom goes in, double bottom here, through this peak here. Okay, then the market comes and gut checks. Okay, so often you get what we call the return move when you get these basing patterns. So just to go through here, I'm going to stick on a horizontal line there. Okay, so look there, you can see the double bottom is confirmed through that peak there, the peak there, 125.30 on the US 10-year notes. And then we come back, retest once, retest twice, and then kind of impulsively move away. So you've got a little double bottom. So it's, even if you're trading stocks, guys, this is one of the biggest drivers now, the stock indices, right? The push lower definitely yesterday. This next leg lower, it was when we maintained, it was in here. There's the data, okay? Here's the cash market open and bond equity markets rebounded. It was when bonds started to go lower in here, okay, on this bar here, that we saw after the initial rebound in here. That's when stocks started to go lower again. So you should have, or you haven't, you don't have to. I'm not going to tell you how to trade exactly, right? My experience would say, keep an eye when markets become correlated, when the focus for one market is being, on another market's being driven, right? This is the driver now. A lot of the time, the stock indices are the driver, okay, of all the other markets. A lot of the time that happens, okay. And it's rare, I must say, that the foreign exchange markets are the driver. The foreign exchange markets are very much feels to me a secondary derivative of other markets. They're very prone to the bond markets, to the interest rate markets, and to a lesser extent to the stock indices. However, in this case, the stock indices are, I think, playing a little bit of catch up with the bond markets. They've got an eye on the bond markets. Okay, so I think you have to have an eye on the bond market. If the general broader market is watching this, then you need to be watching it. And so when patterns play out in here, it could then make it change your decisions. So if you see this start to, this double bottom forming, it might have got you positive on bonds. And when this happened, I'm just doing it on my time. So this little impulsive rally in here came this morning, London time. So this was 6:30 through say 8 o'clock UK time. Okay, when we get the double bottom going here, let's look what's happening on bonds. 6:30 through 8 o'clock, and look, this is when the bottom goes in. It's literally when the bottom goes in here. Okay, so there's 6:30 through 8. So as you saw that double bottom going in, you could have been a buyer in here of equities. Yeah. Okay, so do please, think about it. Keep an eye on it. I'm not telling you what to do or how to trade, but it's a useful extra piece of information. If you were bearish, this might stop. If you were bearish on stocks, you were in here and you were about to sell when we were down here, and you might be about to pull the trigger on a short. You might then look at the bond market. Oh, sorry, go back to the 30 minutes. See the bond market recovering, and it might stop you selling. If you're about to buy and you see the bond market recovering, you might pull the trigger a little earlier on your buy. Okay. So in here, this looks kind of positive to me, and I know I've been bullish on stocks most of the time, and I just admitted to that. I'm still fairly bullish. The critical thing in here is though, despite the really negative price action yesterday, let's go to the daily chart first of all on the S&P. Sorry, let's go back to the daily chart in here. So we had, it's really positive going. And, even yesterday at one point we dipped and had the rebound. They dipped on the data and rebound. We were back up at the highs. So this looked like it was about to break high. Now, even though we've given all this back, it's still very much contained within this range. And the market is now, look, 1, 2, 3, 4. We'll zoom in and see this whole area. We've spoken about this area, this basing area and support area in here. And we go back to the 30-minute chart. I've shown you that. We've got the rectangle still there, I'm thinking. Let me just step this out to a 1-hour chart so we can see a bit more clearly. Or maybe I've got it on the Nasdaq. Maybe it's on the Nasdaq. There's the box on the Nasdaq. Okay. So part of that bottoming phase, and then these lows in here on the Nasdaq. But let's put it on the S&P 500 because it works just as well on the S&P. So here's the S&P. Look at these peaks in here. So this bottoming structure that we had back in latter January, all these failure peaks in this zone here, and you can see these lows in here. So you got these multiple lows. It's not just the very low here. You got the low there. You got the low there. You got one there. You got one there. So you got 4 lows in this zone. And if we go back and look at where the high here is, look, the high there is right bang where this is here. So you got this zone. So let me just put that box as well in. Where are we? Shapes. So I'm going to put it. It's in here really. It runs across there. There you go. We'll run it right the way out. And look what we've gone this morning, right? We've dipped into that box, yeah? So that's taken off these like highs in here, and you've got the big high there and the peak, and then this peak and this low in here from the peak from the base and the low from the retracement and the consolidation. And then look, we're bouncing back off of it. And then you say, look, the impulsive move we've already seen this morning. I'd be inclined to say, well, if you bigger picture, let's step back to the daily chart. Now, if you think this is in a range environment with an underlying recovery theme from January, and then you're in a range environment, you're at the bottom end of that range, we've highlighted that kind of that zone of support, why would you not be buying it? As much as it was negative yesterday, it's rebounding right at the support zone. So, stay long in here. And I'm going to step back in again now. Let's just go through our analysis. I'll return to the macro and the fundamentals. And look, you got like a base in here. You got above this lower high. You went through it here. And then we've retraced back and now impulsively back higher through this peak. You've got higher highs and higher lows now. So this is all looking positive to me. No massive data. It wouldn't be surprise me as well if we go back and just zoom out a little bit. I've got that all the way to a 15-minute chart. Let me zoom back out to the hour chart. If you think about this bigger range in here, okay, this bigger range, the market would quite happily settle in the middle of that range. In the middle of that range, you can see in here, I've got the Fibonacci retracement is all the way up here. The 50% is up at like 45.12. So I wouldn't be surprised to see it, in that kind of area later today, 45.10 up to 45.20, maybe a bit higher. So certainly for me, that still feels like playing it for the long side. I'm not going to go into huge detail again on, here's the Nasdaq. Same thing though with the Nasdaq, right? Look at the zone. I'm just going to pull that zone out and it's gone back into that. We have the highs in here from the January basing, the lows from these multiple lows in here on the recovery throughout early February. And we've bounced from there. Again, you've got, look, in here, a higher. We didn't quite make the higher high there. Look, you didn't on this first rebound that we had overnight. That's when the bond market did that double bottom. You didn't quite make it above this peak here, but now you've got lower lows and lower highs from yesterday. Now you've got a higher low and a very impulsive move in here back, half an hour ago, 30 minutes ago, up through that peak there. Again, we're getting a little pullback now. I think there's opportunity. Now, if it starts to give up today's low from overnight, if it starts to give up these lows down here, I'm not hanging on to the bullishness. Yeah, you abandon the bullishness. You're flexible. So this starts to break down again. You might have even like a little counter. You might have a little little mini trend support in here, right? Just running through there. Extend that out. Okay, if it comes back down for you don't want to wait to go all the way through the low. If it comes back down through this little mini uptrend line, you maybe exit then, or you could even step in further all the way into a 5-minute. Okay, maybe if it cuts even below, look where it pulls on the way back up in. If it cuts below here, here's the little trend line. Then you're exiting, you're getting out, and maybe going short. Okay, I'm not getting tied to the position because of the recent volatility. Okay, let me. Well, I'm going to finish off going through some of the charts in here. Oil, let's go and take a look at oil. And then we'll return. But oil, as much as, this looked like a topping pattern, the market's held on to support, it's rebounded, and we step back in again in here on oil. And we spoke about this yesterday. Okay, let me just come out. I'm on the 5 minutes, go out to the 30-minute chart. We spoke about the higher highs in here, the market kind of trying to hold in. There's a lot of stuff on here, but having reversed above this downtrend line. We spoke a little about little counter trend lines in here, but you can see in here the market has held on higher lows now, spiked back higher, big swing back lower, big rebound in here. This all looks like it's pointing north again in here to me. Okay, and let's take a look at a nod to gold. And go very erratic session yesterday. Tested to the upside, tested the downside again with that, because of the dollar. This is because the dollar reacting to the bond market, okay? And then the market there, but, dipping and rebounding, just undercutting overnight. And if we step in again onto the 30-minute chart in here, just undercutting the low there, that spike low from yesterday through the data. That low there came through the data, okay? And then the market looked just undercutting here and then rejected straight away. And then again, at the impulsive move high. So these markets kind of are all aligned at the moment. Gold aligned with the bond market, aligned with the equity markets. Yeah. And they've got a big impulsive bar, again, 30 minutes ago. You look at the same impulsive bar in here from 30 minutes ago, impulsive bar there. We see it if we even go to crude, I think we'll see it there, And then we've already seen it on the equity markets. And if we go and take a look at it on the bond market, So we did get it 30 minutes ago here but we're giving it up. So keep an eye on this. Keep an eye on bonds in here. Bonds start to break down again. It could all turn again. Market's watching this. Certainly if it goes down towards the lows from yesterday, the market's going to be worried again, pushing to lower prices, higher yields. It's definitely something to keep an eye on today. Let me go back and run through a few things in here. So, the talks with Putin not going particularly well. So that's not great for risk. But market seems to, as long as there's no escalation, market's kind of ignoring this at the moment. So obviously on the back burner, it's a real concern. However, market's kind of ignoring it, very much focused on the Fed in here, or very much focused on interest rates and the data, and that's CPI data. And we spoke about Lagarde. Just a quick nod to the, so again in here, look, hike. So the Goldman Sachs, the 7 hikes in here. I'm just going through the same stuff in here. This is the US version of 5 things. Again, look, Lagarde backing off a little bit in here. A little bit about oil in there, markets dropping lower, so nothing really of massive note in here. Okay, nothing more for us to contract. And then stock futures extended losses. Well, they did extend losses in here. Bond sell-off eases. Well, now we looked at that. This is an old article, right, on their market wrap. We're actually doing better than that. Let's go take a look. Quick nod to Reuters. In here, European stocks open lower after US inflation. So this is old news. Nothing really significant there. And let me just take a quick look at the US market, see if they've got anything there. And this is, we've already covered this. Wall Street ends down sharply in fears of aggressive rate hikes in here. Hot inflation fuels case for big bang Fed rate hike in March. So talking about all the stuff we've already mentioned here, nothing more. And futures point to more losses on Wall Street. Well, that, it did, but futures have turned around this morning and we've got a rebound. So looking a little bit healthier on the equity side. So all right, guys, nothing really more to go through on the macro side there. We've looked at all the charts. Tend to be bullish going into today. Markets seem to have stabilized and looking for the rebounds, but don't get tied to those positions. Maybe keep the trading size a little bit lighter than normal, and be quick to flip the positions if you need to. Okay, you're day trading out there, so make sure you do that. TGI Friday again in here. Have a great trading day. I'll be back with you with another bull versus bear on Monday. Have a great weekend too. Until then, stay safe. Take care. Bye.